Trade Today by Jaden Newman. Firstly, what is the stock market? The stock market's a place where people can buy and sell shares of a company. When you buy stock, you're basically owning a small part of a company, really small part of a company. So if you bought a stock of Apple or McDonald's, you own a very small little part of them. And some major ones are like the Nasdaq, which has over 3,000 different stocks in it. Let's see. Why trade stocks? You can build wealth over time, and you could beat inflation. And it's also passive income, such as dividends, which we'll get into later. And it could be fun and strategic. Trading versus investing. Trading is all about short-term moves. You buy and sell stock usually within the same kind of day, that type of time frame, and you try to take advantage of price moving fast. And it's pretty fast-paced and hands-on, so you do need a little bit of skill. Investing is more like long-term growth. You buy and hold stocks for months and even years at a time. You just kind of buy it and hopefully it'll go up within the next 10 years or something, that kind of thing. And you try to build wealth slowly and ride market ups and downs. And it's usually a lot safer and easier. What moves stock prices? Supply and demand is the most basic route. And company news, their earnings, their products, lawsuits, those kind of things that you see in the news. Economic news, interest rates, global events like wars, pandemics, recessions. Okay, so some key terms to know is ticker symbols, which is Apple would be AAPL, and they all have their own ticker symbol. And one share is a piece of ownership. A market cap is a value of a company. And a bullish and bearish is a market up and down trend. Different strategies are day trading, which is pretty common among newer kind of new gen, which you buy and sell within the same day, and you can usually make a lot of money within minutes or And then swing trading is holding on for days or weeks at a time, and position trading is that long-term investment we saw earlier. And you can be your strategy can be influenced by how much time you have, because obviously day trading would be a lot of hands-on. How to read a chart. So candlesticks are probably the best one you can use if you are going to read a chart. Candlesticks are little bars, as you can see right here, that show price movement over a set period, whichever time frame you choose. And it could tell you where the price started and opened, where it ended, the highest price and lowest price. The little candlestick out here, the little stick part, is the highest price it hit, and the lowest price it hit on the bottom. And it would have, if this was a green one right here, it would have opened right at this little where the body is, and then closed right at the top. So it would have went like this, maybe it went down, maybe it went all the way up, and then ended up closing right here if it was a 5-minute time frame within 5 minutes. So time frames, if you're on a 1 minute time frame, each candlestick shows what happened within 1 minute. Okay, and then volume shows how much interest there is in the stock at a given time, which would be around here. It's kind of like a chart that you usually see. I don't know, but high volume is more activity, reliable moves. Lower volume is fewer trades and unpredictable. Spikes in volume, news, earnings, and breakouts, like this little red one right here. Support and resistance, these are price levels where stocks often bounce or reverse. Support, a price level which the stock tends to stop falling. It's kind of like a ceiling. Think of it as a ceiling. These lines right here would be it. Once it hits that, usually it either goes up a lot or down a lot. Technical analysis, it focuses on charts and patterns, looking at the past movement to predict the future. You can use candlestick patterns, indicators, support and resistance levels, as we saw earlier. And then fundamental analysis is all other kind of things, news, revenue, profit margins, debt, company news, earnings reports, usually used by long-term investors. Orders, such as market orders, is where you buy instantly at the current price. Limit order is where you buy at a price that you choose that you want to buy. And a stop loss order is an auto sell that protects you from losing too much. Dividends and compound growth. Dividends are companies where they pay you money just for owning their stock, even for a few months. And they pay you, so it's kind of like passive growth. So you could just buy one, and 2 years from now, they would have paid you every few months. So compound growth is like reinvesting over time, and with the dividends you can make it so you buy more of the stock each time, or you can just have it go into your account. Tools you can use for like brokerages or like Robinhood or Webull is usually good for beginners with no commissions. Charts, the best I would recommend is TradingView, best for like studying the charts. You can draw trend lines, indicators. You could connect to your broker too if you want to trade on there. Yahoo Finance is good for like news and research and checking like earnings release dates and stuff. And paper trading is really important if you've just started, because you don't lose any money and you can still it's basically the exact same thing as regular trading, just with paper money, and you can set the account balance and everything. And that's about it. That's everything you really need to know for like the basics, and you can decide which trading style works best for you, whether it's day trading, swing trading, or long-term investing. Thank you, and I hope you have a great rest of your day.